Hello everyone, welcome to Trade Vastly Online Trading Academy Total. This is Dynamic FX bringing you today's market analysis. Before we proceed, please hit the subscribe button. Also hit the bell notification so that you get notified every time we post a new video. Please also give us a thumbs up if you like our video. If you also don't like what we have to offer, you can still give us a thumbs up. We'll appreciate that. Thank you. Today I just wanted to do a short video on today's market. For those of you that watched my last video, you know that we're looking at the New Zealand dollar today for the week, basically given the big interest rate decision at the expected rate cut in the market expects. Looking at the fundamentals or the economic calendar, the market actually expects a rate cut on Wednesday. Okay, that's expected on Wednesday in New Zealand. Let's see where that is. It's Tuesday. Okay, Wednesday for New Zealand dollar. Are we? Yeah, on Tuesday. This is Tuesday. Yeah, this is Tuesday. I hope you've been having a profitable trading week. I just wanted to draw some of our attention to let us know that actually the trading market shouldn't be that difficult if you actually know what to look out for, which is why it's important that you invest in the right knowledge before you get into trading. Okay. I wanted to look at where that is on calendar perspective. I think I just went past it. Okay, I could just simply do this so that I don't waste your time. Let's see, hit the home button, come to countries, clear all for New Zealand, and we save. Okay, so yes, Thursday, Tuesday, no, for this week actually. Okay, good. Yeah, the big decision is the interest rates. You can see from here. Okay, so let me take that. Yeah, big decision Wednesday. Okay, on Tuesday we're expecting business inflation expectations for Q2. I think the market expects that to drop, forecasting a decline in that. That may represent a bit of the good news. We'll wait and see how the market reacts to that. But the big expectation will be this. I was following an article saying that there's a 50% chance that the RBNZ may most likely reduce the interest rates to 1.5%. Okay, so that's why we're actually following that. And when we also did our sentimental analysis, for those of you that please that are new to this channel, please check out our previous video and find out what our position is. So I won't do too much on this. I just wanted to do a short video and give you an update on the market position. So, all right, so that's why we're looking at the New Zealand dollar. All right, I wanted to just quickly bring your attention to what the trade was like today, because I'm sure a lot of trades, a lot of us might have had trades reverse on us today, a lot of trade reversals. But so for some of the trades I found interesting, looking at this particular instrument, the crude oil, we can notice what happened initially. Price gapped for the previous week, then we got another push up. Okay, now we've also seen price push gap down this way. Okay, yes, I just wanted to bring your attention to maybe why you see such things. It's always good when you're doing your analysis, you have a much more holistic approach rather than just focusing on one aspect of analysis. Okay, so I was curious. I looked at what the sentimental position is. This is what we call the COT analyzer. This is a tool we use in TradeMaster to determine the sentiments in the market. Okay, for those of us that are new to this, COT actually stands for Commitment of Traders Report. It is a US commodities futures trading commission reports that is issued every week. Okay, so if you'd like to learn more about that, I'd like to encourage you to please subscribe to our courses online at www.trademaster.com and get to learn more about this particular report. Okay, so having said that, I won't dwell too much on that. Let's look at what the position was for crude oil. So if we look at crude oil here, okay, what we'll notice is that there was a buy and sell position added. So you could see the red bar represents sell, the blue bar represents buy. Okay, so we can interpret this as, okay, buy positions being added at the same time sell positions also added. So remember, like I said, the way to read this chart is look at the positive numbers to your right. That means an addition. If you look at the negative figures to your left, it means a subtraction from that from the number of contracts in that particular instrument. Okay, so since what we're seeing on the crude oil here is an addition of sell and addition of buy, if you go to your charts, you notice that quickly, which is exactly what played out on crude oil, like as I was explaining. Okay, so you can see price push down, representing the sell. Also, there's a huge push from buy to the upside. Okay, so but currently price is sitting at the weekly pivot at 61.85. We could still see price push higher up to 63.37. So but most likely, in my own opinion, look at coming from the daily perspective, we could still see price push down in the long term. So let's look at what the position is in the long run, of what the long-term trend has been for the crude oil. Okay, we have more buy positions and less sell. So okay, we could see that could just be a simple temporary retracement for crude. Okay, like you already see price react strongly at this level with this sort of negative reaction at this 60.37 for price found support there. So we could see price really push a bit lower and encourage more buyers to come in before we start heading towards the 66 again, to the 66.25 level. Okay, so that was interesting. We could look at another instrument. Looking at the cut analysis again. Yes, I looked at gold also. For gold, you can see if we look at the last report, the position was more of a reduction in sell position and just a bit of buy position here. Okay, so you can see sell position taking out more buy position, just a little, just enough to push price up. Okay, so definitely them taking off the sell position. Taking sell position means that they are not interested in pushing the price down lower and longer. So if you look at a much more long-term perspective on a weekly basis, or how you can see on the 16th of April, there's a huge short position was added. Another short position was also added on the 23rd of April. Then on the 30th of April, we have that long position taking off. Okay, so although we still need to see more buy power, more buy position added to be able to confirm that price of gold will go up. But if you also look at here in terms of net position between the non-commercials and commercial, and the non-commercials are net long, while the commercials are net short. Okay, you see the price was actually pushing down here, was pushing down to here at this point here. Okay, price was pushing down here. All right, then we had another like a bounce off there. So let's see if that played out on the charts. Let's see if that played out on the chart. Okay, this is just more of an analysis, just a quick review. So let's look at what happened on gold. Let's look at lower time frame, see what played out. All right, you see price coming in a little, all right? So just struggling to go down, you see, just a bit struggling to go down, then immediately price pushed higher. Okay, so that just shows that at the drop of this price, you can see some of the indicators indicating that price will most likely not go lower. So it found support at a weekly pivot of 1279.10, which could represent a good price to get in. We could see price shoot higher for 1286 again, and if we break that, we could also head for 1292.10. So gold still represents a good buy, but I would need to wait for a while to see more buy positions added before we start going long. All right, so let's see what we have on a dailies. We still have this smooth downtrend, but we are definitely getting ready for maybe a reversal. So we still need to see price push down lower. Okay, so good. So that being said, so thank you for watching. Just as some of the okay, unless I could still take one more. I wanted to look at what also happened to the Swiss franc. We had similar position as at the 30th of April. Even what we saw here, we could see. We notice this happened here also. You can see sell position here, also a buy position here. All right, so let's see if we have any Swiss franc position. All right, let's see. Swiss franc. Do we have any position? Any chart open for Swiss franc? Yes, let's check here. Okay, for the Swiss franc, yes, you can look at the USD CHF. Okay, I already drew that out. See price coming down here. All right, price push down, up, down. So okay, and just to why I decided to do these videos, still to just personally also remind myself what is responsible for driving price. All right, we need to understand that the big guys are the ones responsible for driving price. And when I talk about the big guys, I'm talking about the big institutions, the Morgan Stanley, the big banks, the United Bank of America, all the big banks, the central banks, big commercial banks, and hedge funds, fund managers are responsible for driving price in whichever direction. All right, so we need to be aware. So the number one rule at Trade Velocity is that you learn not to trade against the sentiment. But the basic what people learn is okay, the trend is your friend, not to trade against the friend. But at Trade Velocity, sentiment is key. Sentiment is king. So if you'd like to learn more about that, please visit www.trademastery.com and learn more about uh, how to trade effectively. Okay, so don't forget to hit the subscribe button. Also hit the bell notification so you get notified every time we post a new video. Give us a thumbs up if you like the video, and if you still don't like the video, still give us a thumbs up. We'll appreciate that. Thank you for watching. See you in the next video. Shoot.